As we sit here now, we are at the very end of July. What's next when you do an outlook of the rest of 2023 when it comes to Tether?
Right. So, I mean, right now things seem pretty clear sailing for Tether. I mean, they've amassed a massive, I guess, war chest of assets that they can invest in, and the Fed just raised interest rates yet again, and they are signaling that there's a good chance they're going to have to do it at least one more time this year. So, estimates that we see as far as interest rate projections suggest that continuing to invest in these different assets is going to be a very lucrative uh, endeavor for Tether. Of course, when you're dealing with a company that does obfuscate from time to time, especially when it comes to transparency, there's always the chance of what we call like high impact, low probability events, or the whole idea of we don't know what we don't know. If it turns out that there is some major red flag with Tether and their holders decide to redeem en masse, that could be problematic. But right now we don't know what we don't know, and Tether has taken steps to um, do a better job of removing doubt about its collateral and just being a bit more transparent by going higher up as far as quality of auditor and accounting firm goes. Perhaps the biggest challenge then would be, assuming there's no big red flag from Tether that could cause investor angst, is just what's going to happen in Washington with stablecoin legislation, and if that may or may not help Circle or one of the big banks decide to step in and try to take some of the pie. An influential Democratic senator who I spoke with for the story actually told me, he would only speak on background, but he told me that interestingly, regulation tends to protect incumbents in markets, but in this case, the exact opposite may actually happen.
Steven Ehrlich, thank you for the updates. I appreciate you coming on. Thanks again.
Yeah, thanks, Brittany.